In this video, we will look at the best method and strategy for technical analysis using Elliott waves. Elliott waves is a technical analysis method developed by Ralph Nelson Elliott in the 1930s. This method is based on the idea that financial markets move in predictable cycles that reflect the psychology of the crowd. Elliott identified two main types of waves: impulse waves and corrective waves. Let's look at impulse waves first. Impulse waves consist of 5 waves that move in the direction of the main trend. These waves are labeled with numbers from 1 to 5. Within an impulse wave, we can distinguish 3 subwaves that move in the direction of the trend, waves 1, 3, and 5, and 2 subwaves that move against the trend, waves 2 and 4. Wave 1, the start of a new trend. This usually occurs after a significant drop or rise when the market begins to reverse. Second wave, the correction of the first wave. This wave never fully retraces back to the beginning of the first wave. Third wave, the longest and strongest wave. It usually exceeds the length of the first wave and is accompanied by significant trading volume. It will be difficult to go long on the first wave because it is almost impossible to predict when it will appear. But after we have seen the correction after the first wave, we can confidently take positions to buy. Fourth wave, the correction of the third wave. This wave is often complex and can take the form of a triangle. Fifth wave, completion of the impulse movement. This wave is often accompanied by divergence on indicators such as RSI or MACD. In general, there is nothing complicated. And now we can move on to the corrective waves that occur after the 5-wave growth. Correctional waves consist of 3 waves that move against the main trend. These waves are labeled A, B, and C. Corrective waves can take many forms, including zigzags, flats, and triangles. Wave A, the beginning of a correction. This wave is often thought of as a temporary pause in the trend. Wave B, correction of wave A. This wave is often the most difficult to analyze as it can take many different forms. Wave C, completion of the correction. This wave is usually equal in length to wave A and completes the corrective movement. It is clear that the correction will last for 3 waves, but it is not clear how deep it will go. To find out where the correction will last, we need a very famous tool on TradingView. The tool is called Fibonacci retracement. It should be stretched over the whole impulse, starting from the very beginning of the impulse and stretching to the end of the impulse. Now we have several levels. Most often the correction occurs at 65% of the total growth. If we look by Fibonacci, this is 0.618. Here we have found the approximate correction. One of the key features of Elliott waves is their fractal nature. This means that each wave can be divided into smaller subwaves that follow the same rules as the main waves. For example, there are 5 subwaves within impulse wave 1, and 3 subwaves within corrective wave A. Even on the smallest timeframes, you can make predictions on Elliott waves because each wave is divided into 5 subwaves. Here we are, and we have a quick breakdown of Elliott's wave principle. Write in the comments what next video you want to see about trading.